Welcome to CATEX TV. My name is Frank Fortunato. Today is Wednesday, March 7, 2012. Here's a troubling story. The top American securities regulator said yesterday that the SEC is exploring whether insurance companies can qualify for an exemption in the proposed Volcker Rule that would protect them from having to scale back their investments in hedge funds. According to SEC Chairperson Mary Shapiro, said this is a really important issue and we're reviewing it carefully. The Volcker Rule, which is part of the Dodd-Frank oversight law, adds distance between the world of speculative trading and commercial banking. It bans banks from proprietary trading and limits their investments in hedge funds. Some insurance companies that own banks have complained that they too would be hit by the Volcker Rule. Is that such a bad idea? I don't think so. The same jury yesterday that found former prominent Texas financier Alan Stanford guilty of running a $7 billion Ponzi scheme is now deliberating on a civil trial. Stanford had pleaded not guilty to defrauding more than 20,000 investors, but was convicted on 13 out of 14 counts. Liberty Mutual up in Boston has announced a 78% drop in profits, but they still made $356 million in 2011. The new president, David Long, said that the company's position was quite solid and that its diversification had served it well. He's not kidding. The company was hit by a $2.7 billion cat bill in 2011. Not bad for them. HSBC has sold several insurance divisions in Asia and South America to QBE and AXA. QBE and AXA both collectively paid $914 million in cash for businesses in Hong Kong, Singapore, Argentina, and Mexico. And a very perceptive article in today's Insurance Day by the editor, Richard Banks, said that the lack of suitors for Lloyd's insurer Omega after the long drawn-out and costly merger process of last year threatens to leave shareholders with a loss-making subscale franchise. Last year, Omega lost $95 million. The company had been the subject of considerable speculation takeover during the last 18 months, with only one offer coming from Haverford, leading to an unconditional offer, and the outcome of that was deemed unsatisfactory by Omega. The article notes that with the likes of Hardy syndicates and Flagstone syndicates now on the marketplace, Omega may be left standing at the dance. Joe Plumeri, the head of Willis, was in China yesterday and he gave a speech to an aviation industry group. He said that airlines face a number of threats. He said reputational risk was likely to be the hardest risk for airlines to manage. Mr. Plumeri said, quote, while a reputational crisis can destroy a company massively and almost instantly, they're virtually impossible to predict. He also said some other risks included loss of customers, changing legislation. Facebook reported that technical problems knocked out their site in Europe earlier today. It's now been resolved and everybody should have access to the site. And the French President Nicolas Sarkozy, up for re-election in April, is also tacking to the right, like many candidates seem to do. He said there are too many immigrants in France. He said our system of integration is working more badly because we have too many foreigners on our territory and can no longer manage to find them accommodation, a job, and a school. That's the news for today. If we have any breaking news, we'll come back and tell you. Thank you for watching.